All right, all right, all right. The end of a volatile day, and I would attribute that really to triple witching or quadruple witching, actually. You could look that up on Investopedia if you're not familiar with it, but that's what today is, and you need to keep an eye on it. The daily on the S&P, actually, I'm kind of happy with the outcome because we closed above that 50-day EMA, and that's important. Um, that would suggest that we move up on Monday, holding that 50-day EMA. It's not impossible we turn around and go the other way. But I do believe still that we're going to get that Christmas rally. And I think that a lot of this volatility was a result of the quadruple witching. I would have been happy if we closed at that hammer. At one point in the day, it looked like we were building that hammer, but obviously, you can't really call it a pattern until the bar closes. But it held a good support, and I'm happy with that. One of my free folk had pointed out that there's a topping pattern and asked why I'm optimistic because I see that topping pattern. And he's correct, there is a topping pattern. The topping pattern doesn't necessarily mean that the trend is going to reverse. It means that the trend is coming to an end. So there are two ways to end a trend. You can consolidate or you can reverse. So technically, that it is a topping pattern. It doesn't really trigger until it breaks this low right here. So we're going to have a lot of heads up if this thing's going to fall apart. And if it falls apart, I think we have quite some move down. But I don't think that's going to be the case. I'd say our biggest exposure on Monday would be the 45.34. But I'm really hoping that we get this little Christmas rally into January, and I think we're going to see a lot of volatility in January. I think actually I feel that this may be our trading range. I feel that we're going to enter a consolidation for the next year or two. I don't know why I feel that. Well, obviously, based on everything that's going on and the roll around and the rising of interest rates, I think that people are going to move into value stocks, and the interest rates are going to go up slow enough that it's not going to beat the hell out of tech. But I don't think that we are going to see any great gains in tech over the next year or two. And I think things are just going to reprice and things of that nature, and then um, um, innovation and things like that are going to start making tech hot again and start growing. And we'll probably get the third wave of tech, which is really this metaverse. Anywho, that's what I'm looking at. So on a daily, there's the trend. We're in consolidation, so I'm neutral with a bullish bias right now. And if we take a look, since the week is out, let's have a look at what is going on the week. The week two looks like it's entering a trend. So we do have a bearish divergence right here, which is giving me my neutral bias. But seasonality and just where this bar closed is kind of inferring to me that we're getting that Christmas rally and we're going to be bullish, because you could argue that this is the building of a bull flag. I'm sorry, and on the break next week of 731.99, let's call it 732. On the break of 732, then that bull flag triggers and we have another move up. That may peak into the holidays, but nonetheless, we can argue that this is a bear flag, bull flag. Oh my goodness, I do that all the time. So that's my view on SPX. Let's take a look down the line. This is kind of interesting. The 10-year traded off a little bit. That is a flight to safety. Could be a knee-jerk reaction based on just algorithms on the bonds, and a knee-jerk reaction to this sell-off at triple witching. So we could take some of this stuff with a grain of salt and keep an eye on it Monday and see how we start trading. So on the weekly, still this looks as though the interest rates are going to move up. It looks like a trend reversal to me. But yet, you know, here you have two top patterns came down, but it looks like a trend reversal. Let's get this bad boy out of there. So I wouldn't be surprised if we get a move up in interest rates on Monday. And what else do we like to look at? Let's look at Apple on the daily. Nope, we're here on the daily. Got that double top. It triggered when it broke over here. I think you might have a little more movement down in Apple if you buy an Apple. I think you're looking at that 65. I think you're looking at that gap fill on Apple on the daily. I would still watch for that gap fill, but weekly looks. I mean, you could argue a bear flag here. It's a bit of a retrace, but it did have an aggressive move up. Got that retrace, and again, we have quadruple witching, so a lot of this is really out the window, and we would know more on Monday. So anyway, you know what? My ADD is kicking in, and I think that we need to look at this again Monday morning and see what the futures are doing and what influence it'll have on the market at the open, and we could determine really or interpret the price action better, understanding what we're seeing Monday morning and after the quadruple witching. So that being said, everybody have a good weekend. Be calm and cool. Get some meditation in. I'm not going to wish you good luck trading because there's no trading over the weekend. So I'll see you guys bright and early Monday morning. Do me a favor and hit the subscribe and hit the bell. And hit the like. I appreciate everybody out there who's doing that. And I really appreciate everybody who's throwing me comments and challenging what I'm saying and asking me questions. It makes it interesting for me. And, you know, I feel like I'm helping somebody and makes this all worthwhile. So do that. I'll respond. I'll get back at you. So have a happy and healthy, and I'll talk to you Monday.